Income Tax 2020, Practice Problem 1, Presentation 24, Gifts to Charity. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software to follow along. However, I do think they have a 30-day free trial. So if you can get access to a promo or demo version of it or any other tax software, it might be a good tool to practice with. We're going to be continuing on with our comprehensive practice problem number 1. And in prior presentations or in prior sections, we entered the information for the total income. Then we're looking at the information for the above-the-line deductions. Now we're focusing in on the below-the-line deductions, those being the itemized deductions we're currently itemizing at this time. At this point, we want to consider the charitable contributions. So if we go back on over to Schedule A, and we're scrolling down to the charitable contributions, so we had the medical, the taxes, the interest, and now we have the gift to charity. We already had that $500 that we put in place, and we put that in place when we were looking at the above-the-line deductions before we thought we were going to itemize, and then we had the $300 of which could have been taken up top. So remember, if you're not itemizing, we do have this item up top on the 1040, which would be above the line, which is on the first page of the 1040 instead of on Schedule 1 like you would think it would be, and it's right here on 10B. So if we were not itemizing, we would have $300 kind of capped here on the first page of the 1040. Now that we are itemizing, then we go to where we normally would go, or traditionally would go, for charitable contributions or gifts to charity, that being on the Schedule A. So we now have the $500 pulling over here, contributing to the itemized deductions, which are now over the standard deduction. So that data input, we're saying those are the cash contributions. And that is going to be here. Now remember that the contributions is going to be something they're going to have to tell you. We may not have the documentation that we would have straightforward on like income items like a W-2 income or 1099s and whatnot. You might have items provided to you from the charitable organization. They might simply give you a list of those things. But it's kind of nice if they actually sum it up for you, if they give to a bunch of different charities, so that they can give you the line item that you can just simply put in here and then let them know that they need to have the supporting documentation in the event that there is, of course, an audit that you need to be supporting the documentation there. So instead of giving like every line item or date that had been given to charity, possibly summing up the charitable contributions by organization or something like that can be useful. Now then you also might have contributions that are non-cash contributions. These are things that cannot be deducted above the line typically, if you are not itemizing, but may be deductible if itemizing. So I'm going to go down here to the non-cash contributions. You'll notice the note here says use screen 26 for total non-cash contributions over $500. We'll have to do some added reporting. Let's go ahead and do that. I'm going to go to screen 26 here. We'll go to 26 for the non-cash contributions from 2883 and give them more added information. So I'm going to say it's going to Goodwill, and then we're going to go down for the description of the property. Now note that the information that you might get from the place that you contributed to will typically not give you the dollar amount, and they might give you some kind of limited description of the property, because obviously if you're given a bunch of stuff, they might give you kind of a limited description of what it is. What you won't often have is going to be the fair market value of it, because you can't really put that on the thrift store or something, the thrift shop or whoever you're giving, like a Goodwill, to require them to value types of items that are going to be given to them for charitable contributions. But they can give you a receipt of, hey, look, this is how much was provided to us, and this is kind of a general description of what it is. So I'm going to just say here, household goods, and you might have more, detailed description than that, or you may not, right? It kind of depends on what kind of things that you're going to be contributing. And then I'm going to go down to the date acquired. Now, the date acquired could have been over many years. You could have acquired stuff that you're contributing now. So I'm going to say it's going to be 0100, and I'm going to put a negative date, and that's going to make it a various date. So it's basically going to tell the system, hey, I purchased them on various times. So how was it acquired? Normally, it's going to be a purchase that's going to happen. Now, also note that when you're going through these kind of questions with the client, what you will typically have is a receipt from something like the Goodwill that says, hey, we got so many bags of household goods, so many bags of clothes, and so on and so forth. And then you can ask them basically how they acquired them. Usually the answer is going to be, well, I purchased them at some point. And then you're going to go through the questions of basically, okay, how much is the current value and what was the cost of them when you purchased them? And the common answer is going to be, I have no idea. And of course, we're going to have to say, okay, we're going to have to value this in some way, shape, or form. And so you're going to have to estimate how much they cost. And then we're going to have to do some kind of estimate in terms of how much the fair market value is at this point in time, because that's going to be the amount that will be deducted. And we can't typically depend on the Goodwill or the thrift shop or whatever to do that valuation, because they're not, they're not in the business of, they're not a pawn shop. They're not in the business of valuing, goods in that way. So the donor's costs, we're going to have to basically guess. So let's say we sent a lot of household goods, and we're going to say that they cost then $3,000. We're going to say $3,000. And then the fair market value, I'm going to say the fair market value is $1,000, which again, you'll have to basically determine what the fair market value is. That's basically what the deductible amount will be. And then how do we determine that? Was there an appraisal? Well, no, we didn't appraise it. Thrift shop value, catalog, could we get it from the catalog, or the comparable sales? So I'm going to say thrift shop value here. And then we have that's going to basically be it. So let's go ahead and then go back on over. I'm going to go to the forms then. And now we've got our charitable contributions, including the $1,000 at this point in time. And that's going to be coming from an added attachment, that being Form 8283. So if I go to Form 8283, then it's not available yet. This would have the detail of it, so I won't get into it now. That's going to give the detail, obviously, basically coming to this $1,000 and providing more detail about what the goods were, who the goods were shipped to. So if the IRS did, want to do a verification process, they can at least see the address, and the thrift shop, or in this case Goodwill, may have the records of a contribution possibly being made, and be able to at least verify on that, on that point. So in any case, we got the $1,000 pulling forward, which of course is what we claim to be the fair market value. Also, we need the date of contribution. So I'm jumping back to the data input screen. I don't think I put the date of contribution, which I'm just going to say like middle of the year 06/15/20. That will typically be on the form. If you get documentations from the entity, from Goodwill in this case, they'll tell you, the date of the contribution, like how many bags were contributed of stuff. So now we got that $1,000 added to the $500 that were cash contributions for the $1,500. So at this point in time, we've got the medical expenses, $5,093. We've got the $7,369 of the taxes. We've got the $16,000 of the interest for the mortgage interest, the $1,005 for the gifts to charity, giving us the $29,962, which I got those two numbers kind of mixed up. I do that sometime. We're going to go back then to the 1040 then. That should pull over to the 1040. There it is on the 1040, line 12, us taking the itemized as opposed to the standard deduction. So at this point then, total income still at the $81,030. We got the above the line deductions or the adjustments to income, $15,600. We then take the itemized deductions or the standard deductions, in this case itemized, to get down to the taxable income, the $35,468. Then on page 2, tax being calculated upon that now add to $3,706. We have the $8,000 that was withheld from the 2 W-2s. That gives us our overpayment at this point of the $4,294.